Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nasdaq futures tumble on concerns that a cheaper AI model from China's DeepSeek could threaten US big tech. Asian technology stocks rally on the news. Donald Trump holds off slapping tariffs on Colombia after reaching a deal to send back undocumented migrants. The White House says the South American nation agreed to all of the president's terms. Plus, RyanAir reports earnings in the next few minutes. We're going to speak with the CFO of Europe's biggest low-cost airline. Good Monday morning. I bet you didn't see that one coming. Colombia and DeepSeek, an AI model from China, routing these markets. That is the focus of investor intentions right now as to whether or not the thesis around the AI theme in the US, with a particular lens on the spend around Nvidia, has been undone by the gains that have come through from this business based in China, with now one of the top performing apps. European stock futures are currently pointing lower by around 0.8%, so set for a very challenging day this Monday. FTSE 100 futures pointing lower by 0.3%. S&P futures stateside looking to lose 1.2%. But here's the potential shellacking in store for the Nasdaq 100 futures, that tech-heavy index, on a week, of course, when 5 out of the 7 Mag 7 companies report, currently pointing lower by more than 2%. Focus on Nvidia pre-market when that pricing comes through. Let's flip the board and look cross-asset then. The dollar is gaining. That is a story and a theme for the session. The 10-year currently at 4.58. Across treasuries, you're seeing a bit of money flowing in. Yields down close to 4 basis points on the benchmark. The Fed decision comes on Wednesday. Will they guide along the pricing that is now in around 40 basis points for this year, or push back on that? Euro dollar currently at 104. Again, dollar strength is the factor at play here. Down 0.3%, the single currency. Brent at 77.83. Sensitive to the tariff threat that's come through around Colombia, though that has now been walked back by the Trump administration. And Bitcoin, a reminder that there is some profit taking within the crypto space, closing in on that 100,000 level. Just to the downside, down 4% so far in the session. Let's cross over to Asia right now. Abraham standing by in Singapore with no doubt a check on how the DeepSeek story is rippling through Asia's markets. Avril.
Yeah, let's dig deep into this DeepSeek story. We're seeing how China shares were more or less leading the gains in the region today. And this is all this AI fueling optimism, a bit of profit taking underway ahead of the long Lunar New Year holiday. So the gauges are pairing some of the earlier gains. But you see how, if you're wondering where did this DeepSeek story come from, and if you're wondering if it's just out of left field, I think one of the catalysts are this local media report that highlighted how it's kind of jumped to the top of the App Store in terms of downloads, both in the US and China. So that's really fueling that concern that it will kind of eclipse the US, the OpenAI, or even Meta kind of in terms of modeling. When it comes to other shares that are in focus, we're seeing the ones in Japan really coming under pressure. Some of these tech names are losing their shine because of what we're seeing in China. And this picture is coming despite dismal showing on PMIs, as well as the concerns surrounding tariffs. If you flip the board, take a closer look at what we're seeing in some of the AI-related names, or those that are linked to DeepSeek. I think one analyst put it best, Vincent Ling of UBP, saying that, it's really remarkable how they come up with this powerful AI model at lower costs, and it demonstrates this possibility of upending the investment case for the entire supply chain. So some of these names linked to DeepSeek, double-digit climbs. For the board again, I just wanted to highlight what we're seeing in the renminbi, because there's a bit of a reversal from last week's recovery. A lot of this came after the data from China. Manufacturing PMI showed contraction. This is the first time we're seeing it since September, and this is despite stimulus. So a very, very worrying picture, not just on manufacturing, non-manufacturing services slowing as well, and underscoring the need for policy support. Tom.
Ava Hong in Singapore with a check on the Asian markets. Thank you very much indeed. Yeah, further weak data out of China, both in terms of manufacturing and services as well. And certainly that is a factor across mainland markets. Let's get you the latest lines in terms of the earnings coming through from RyanAir before we bring you an interview with the CFO of that company, who's sitting on set right now. RyanAir lowering its passenger growth target for fiscal 2026 to 206 million. The impact of Boeing's delivery delays certainly a factor there. That is being cited by RyanAir. The airline's profit after tax for the full year expected to fall to between 1.5 and 1.61 billion euros. That's down from 1.92 billion last year. Again, the impact on the deliveries from Boeing. Let's bring in Neil Sorahan right now, sitting on set with me, bright and early. Ryan,
Tom, hi.
RyanAir. Neil, thanks for joining us. Look, let's talk about Boeing then and where things stand. That's clearly the main impact in terms of the downgrade, in terms of passenger numbers for 2026. Where are Boeing in meeting those deliveries that you've pushed through, that you demand from them? Are they finally catching up? But to what extent is this going to be a headwind going forward?
Tom, myself and Michael were in Seattle a couple of weeks ago, and that's my third trip in the last 12 months, and I've seen notable improvements on the ground. Things are definitely improving. The quality of the fuselage is coming in from Wichita Spirit, much improved. So I'd have a high level of confidence that the additional 9 aircraft that we need this side of the summer to get to 181 game changers and that to deliver those 206 million passengers will happen. I'd equally have a relatively high level of confidence that the remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things. They fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer, but we are operating into a capacity constrained market. If you look at the Airbus operators, they're behind on their deliveries. They've got the issues with the Pratt & Whitney engines, so I think capacity is going to be hugely constrained this summer, our own included. We had hoped to carry 210 million passengers. We're now carrying 206, so that potentially I think will be a positive for fares into the summer going forward.
It's the second time that you've lowered the passenger growth target.
It is.
Is that it? Are we done?
Yeah, as I said, I'd have a high level of confidence that those aircraft will come in. I saw a number of them in the factory when I was there. The rest are either on rail carts or manufactured, the hulls in Spirit and Wichita. So they're good to go. We can physically see those 9 fuselages at this point in time. And then it's a case of getting, as I said, the remaining 29 in ahead of the summer of 2026. Ahead of the summer of 2026,
that's the additional 29. But you're getting 9 before the current summer season.
We get another 9 in with 172 game changers out of a fleet of 609 aircraft at the end of December. So we get another 9 aircraft in ahead of peak summer.
What is demand looking like?
Demand is very strong. It's robust at this point in time. People are still as keen as ever to get away, and we've 164 new routes out of 2,600 routes this summer, all booking well. Now it's too early to call where the final pricing will come out, but I'm pleased with what we're seeing so far.
Give us a sense, guide us on pricing and yields through this year. How's it likely to compare to last year?
Look, it's too early to guide on prices. We're only doing our budgets at this point in time, but we will lap the OTA issue that we had last year. If you recall, they boycotted us in December of 2023. It took a number of months to integrate the approved OTA partners. So that'll start to lap itself this year. Capacity hugely constrained. Q1 will be good because we have a full Easter in there. There was no Easter in the same quarter last year, but I wouldn't want to call where fares may go at this point in time.
Are you seeing a consumer that's more cautious?
I'm seeing a consumer who wants to get away and get a little bit of sun.
Okay. Talk to us about what you're seeing in terms of the potential plans to expand the airport capacity at Heathrow, Gatwick and Luton. We're hearing that, of course, from Rachel Reeves, the Chancellor. We'll see if that gets confirmed. Will you take advantage of that? Where would you look to add additional slots? Could Heathrow be part of the play for you?
It's always going to be lowest cost wins and operational efficiency. Somewhere like Heathrow would need to be able to turn our aircraft in 25 minutes, which would be a big ask. It's one of the few airports in Europe that we don't fly into. But, we'd be very keen to see more growth, very keen to see more capacity. But I do feel that the plan to add capacity while at the same time putting up air passenger taxes is kind of contradictory. If you really want airlines to grow in the UK, then you need to bring down the taxes on the passengers arriving and leaving from the country. So I would call on the government, first and foremost, reduce APD and then start looking at the CapEx. But, you know, I'd encourage as much competition and as much growth as possible.
OK, yeah, you've pushed back on that tax increase previously, haven't you? So that's the UK government. The US government, do you think Trump in power changes the flying dynamics of European flyers? Do you think there are more domestic flights versus flights to locations like Orlando? Does it change at all?
At the moment, it looks like people are still travelling across the Atlantic in numbers. And equally, I think with the strong dollar, we're going to see an influx of US tourists into Europe this summer, keen to get the good value for the money. And a lot of those will probably end up on RyanAir flights flying around. But it's too early to call really what's going to happen with the new administration. I think, you know, it's probably not unhelpful for Boeing and others with Trump in the White House to move things along.
Do you expect supply disruptions? I mean, the threat of tariffs is clearly there. We got a reminder of that today with Colombia. But longer term, there's a potential threat to airplane parts, aircraft themselves. Do you start to mitigate that?
I think there's less chance. Boeing is fundamentally important to the US economy. I think they will be supported equally. A lot of the US carriers take Airbus aircraft. So I would be hopeful that we don't see aircraft getting caught up in any tariffs that may or may not come to play over time.
OK, Neil Sorahan, thanks so much for coming into the studio on the back of those earnings. Again, RyanAir cutting its full year 2026 traffic target to 206 million on Boeing delays. Seeing pretty strong demand, though, through Easter and into the summer. Neil, thank you for the update. The CFO of RyanAir, of course. Coming up, we're going to discuss the latest market moves following President Trump's threats of tariffs on Colombia, a threat that he has now walked back. Details are next. This is Bloomberg. Welcome back. Happy Monday. The White House says the US will hold off threatened tariffs on Colombia after reaching a deal over returning undocumented migrants. Colombia's foreign minister says it has overcome an impasse with the US after earlier refusing to let 2 planes of migrants land in the country. For more, let's bring in Bloomberg's Bill Ferries. Bill, I'm not sure this was top of mind for investors come Friday, that this would be an issue they'd have to grapple with. Walk us through what we know about the relationship between Colombia and the US and whether or not this resolution is going to hold.
Well, right. Historically, Colombia has been a pretty close ally of the U.S., particularly when it comes to the fight against drug trafficking. In this case, you have a leftist president in Colombia and a more conservative leader there in Washington with Donald Trump. Donald Trump, of course, promised in the campaign that he would start deporting migrants who are in the country without documentation immediately. When the Colombian president learned that there were 2 flights on the way on military planes, he objected to that and said did not basically give them permission to land in his country. And Trump struck back very quickly, saying that he was immediately going to put 25% tariffs on Colombia and that those tariffs would go to 50% within a week if the Colombian government didn't back down. They essentially did back down several hours later. We don't know all the details, but the Colombian president reposted a statement from the White House saying that the Colombia had agreed to all of President Trump's terms in this dispute. So perhaps one of the fastest, shortest-lived trade disputes in recent history, but I think it is a shot across the bow against countries who think that they're going to push back strongly on this administration.
Yeah, quite a stark warning shot, as you say, for other countries looking to that trading relationship with the US and the demands coming through from this Trump administration. Talking of demands, or at least suggestions, to the Middle East, and we hear comments from President Trump around Egypt, maybe Jordan taking more Palestinian refugees, as of course the ceasefire between Israel and Hamas holds but remains under pressure. What is the latest when it comes to the Middle East and the suggestion from Trump that maybe Jordan and Egypt need to do more to assist Palestinians?
Yeah, President Trump taking a number of steps on the Middle East over the weekend. He said he was going to release a hold on the delivery of 2,000-pound bombs to the Israel Defense Forces. And then he made those comments following calls with King Abdullah of Jordan and with Egyptian President al-Sisi. He said he wants both those countries to take in a lot more Palestinians. He thanked the Jordanian king for having basically taken in Palestinians for decades, but said they need to do more. Said he used a phrase about wanting to clean up Gaza after this conflict. Both those countries rejecting those entreaties and pushing back on the White House. So not really sure where that leaves the U.S. and President Trump's demands, but certainly trying to make an impact very quickly in what is still his first week back in the job.
Yeah, when 1 week feels like 6 months. Bloomberg's Bill Ferris, thank you very much indeed. The updates in terms of the standoff with Colombia that seems to have been resolved, and of course the tensions that continue within the Middle East and Trump's suggestions to Egypt and Jordan. Now, the US dollar strengthened, then paired gains as Donald Trump rescinded those tariff threats on Colombia. The Bloomberg Dollar Index is currently up about 0.3%. For more on the latest market moves, let's bring in Bloomberg's executive editor for Asian markets, Paul Dobson. Paul, just walk us through the market reaction then to this standoff between Colombia and the White House. Again, seems to have been sidelined for now. We're still seeing pricing to the upside when it comes to the greenback.
Yeah, hey, good morning, Tom. So I think as Bill was saying, that mini trade tiff between Colombia and the US may have blown over very quickly, but it's still left an indelible mark on the markets. And I think what we're seeing here is that last week we had gotten so comfortable with the idea that we were having a nicer, kind of softer approach to tariffs from the US president. This week, right at the start of the week, we've got a reminder that, yes, those tariffs are definitely a tool that he's willing to deploy pretty much at the drop of a hat, and that people need to be on their toes and watch out for that. So with that sort of Damocles hanging over markets again, you have a higher risk premium coming back into the market, and that's why you're seeing currencies like the Mexican peso, South African rand still lower on the day, despite the swift resolution of the Colombia crisis itself.
And we know it's uncertainty around tariffs that is factoring into Fed decision-making as well. We have the Fed decision on Wednesday. What are we expecting? Are we expecting to hear anything from Jay Powell and co. around how they are starting to factor in the threat of tariffs?
It's going to be unavoidable for them to at least take some questions on it. I think that this is going to be really key for the outlook for the Fed and for US markets over the course of the year, right? At the moment, the market is still pricing, and analysts are still expecting the Fed to continue to ease interest rates this year, albeit at a much slower pace than what we've seen at the start of the easing cycle, at the start of the cutting cycle. And yet, if there's an intimation that the US will be on hold or the Fed will be on hold for longer, as it waits and sees, or if there's any suggestion at all that, if we get these inflationary policies, they may need to consider hiking again, then the market will not like that very much. Given the big run-up in bond yields that we saw in the lead-up to Trump taking over control in the US, that's the sort of risk factor that people will be watching for very carefully during the Fed meeting this week.
OK, Bloomberg's executive editor for Asian markets, Paul Dobson, on what to watch for from the Fed at that decision and that meeting later this week. Wednesday, of course, this week. Paul, thank you. Coming up, we're going to discuss the outlook for the global EV market against the backdrop of President Trump's rolling back of US electric vehicle targets. How is that roiling the sector? We'll get the analysis and the details. It's coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Nissan may slow a planned ramp-up of US-made electric vehicles on uncertainty around President Trump's energy and trade policies. The company says production plans in Mississippi will depend on whether the $7,500 tax credit for EVs is actually scrapped, as of course threatened. A Japanese media report at the weekend said Nissan is planning up to 2,000 job cuts in the US this year. And 2025 is looking like another record year for global sales of electric vehicles, despite some of those challenges. The pace of sales will differ around the globe as Europe rolls out new policies and the Trump administration changes, of course, as we were mentioning, US government policy, particularly some of that support for the EV sector. Ryan Fisher from Bloomberg NEF's Clean Transport team is here to explain the year ahead and factor in some of these changes. Ryan, thanks for joining us around the step. Give us an update in terms of some of the main changes happening within the EV markets this year and how much of that is coming from the Trump administration.
Yeah, sure. So we do 10 things to watch each year, and of course the EV market is a big one within clean transport. We think it's going to keep rising, so about 22 million EV sales. All of the headlines around EV sales going down actually still been growing. We think Europe is a good place to start just because it's growing. Then I'll come to the US. So about 33% growth we think this year because the fuel economy standards are getting stricter.
Is that cars and trucks?
So that's just cars. I'm focusing on trucks is also
That's 33% growth this year.
33% growth in EV sales. Yeah. That's anything with a plug. And that's because the fuel economy legislations are getting stricter. So these automakers face fines. This can be multi-billions of fines, which means they have to put more EVs on the road. The other thing they can actually look at doing is selling less internal combustion engine vehicles or putting the HEVs out there. So Toyota, very popular with the hybrid vehicles, that lowers the emissions. We've seen people like Polestar come out recently, say hundreds of millions they could actually make in revenue from selling the credits because they're largely an EV company. Volkswagen looking like it's got one of the hardest tracks to tread to meet this target. And then you've got the US, so less pressure on the automakers because Trump's saying he wants to repeal some of this fuel economy legislation. So obviously very important for what's going on there.
Do we have clarity in terms of how much of that is going to impact sales and production of EVs in the US? I mean, we're still trying to get to grips with exactly how and to what extent this is going to be implemented.
Yeah, and I think on the intro you gave a great thing there. Nissan saying about jobs, saying about the EV tax credit.
That's not what Trump wants to see.
That's exactly not what he wants to see. So how much of this is just talk and how much is actually going to be put into action? So there's two sides, obviously, to what's coming out. There's the 7,500. Well, even if he does get rid of that, I'd expect to see a bump in sales this year because what often happens is consumers realise the tax credit is going to go and then they start buying these vehicles. Also, what you can see with the manufacturing tax credits is people saying, I'm going to put billions of dollars into manufacturing facilities, largely in Republican states. So how this is going to roll out, I think, is going to be an interesting year.
OK, so you may get some Republican lawmakers pushing back on some of that, given that a lot of the spend is in their states, potentially.
Yes, definitely.
Talk to us about the charging infrastructure, where things stand on that front. I mean, China's leading on a number of different fronts when it comes to the EV sector. Where does China stand in terms of charging infrastructure? Where does the rest of the world? How much of a catch-up is there? Yeah,
so China is about 25% of EV sales last year, just to give you a sense of how many of these things are going.
Global sales, 25%.
25% in the market, yeah. So a real big growth still expected. This year they've got a scrappage scheme for the vehicles, and that means you need lots of chargers, and they're really ahead. So even the fast chargers, these are the ones you could, in theory, go in and get a charge 15 to half an hour. They've got 1 million of these. The oil and gas majors are significantly behind, though. So I think what you'll see is them going from sort of 70% of the fuel sales in the market for companies like Sinopec, PetroChina, and they'll this year have to be a bit more aggressive on their charging infrastructure rollout.
Okay.
If you put into perspective China versus the rest of the world, similar trends really, where the oil and gas majors talk a good game, some of the biggest targets on rolling out charging infrastructure. However, actually, they're behind in rolling this out.
We've run short of time, but smart analysis and very timely. Thank you very much indeed. Ryan Fisher, analyst in Bloomberg NEF's Clean Transport team. Lots more coming up, including a focus on DeepSeek. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nasdaq futures tumble on concerns that a cheaper AI model from China's DeepSeek could threaten US big tech. Asian technology stocks rally, though, on the news. Donald Trump holds off slapping tariffs on Colombia after reaching a deal to send back undocumented migrants. The White House says the South American nation agreed to all of the president's terms. Plus, Qatar is reported to confirm a deal to release an Israeli hostage and allow Palestinians to return to northern Gaza. President Trump calls for Egypt and Jordan to take in 1.5 million people displaced from Gaza. Let's check in on the markets then. And the focal point of investor angst is an AI model out of China, DeepSeek, and one of now the best performing apps on the Apple App Store. It's an open source model, and it is causing anxiety for investors now questioning the thesis that the capex spend, particularly on companies for NVIDIA, their GPUs, is going to hold up as a thesis around the support for this AI revolution that we're seeing. European stocks now taking a hammering in terms of the futures setup, at least, looking to lose around a full percentage point as things stand, pointing to losses of 52 points. FTSE 100 futures here in the UK pointing to losses of around 0.5%. S&P futures stateside then looking to lose around 79 points. NASDAQ 100 futures with that tech-heavy focus, of course, currently pointing to losses, eye-watering, of around 500 points, pointing lower by 2.3% on a big week, of course, for tech earnings as well, with some of the big members of the Mag 7, 5 of the 7 reporting later this week, including Meta, who, of course, caused concerns in the market on Friday, but talking about that capex spend themselves. Let's flip the board and have a look cross-asset, focus on dollar strength. You're seeing yields coming down across the Treasury curve, leading up, of course, to the Fed meeting on Wednesday. 4.58 on the benchmark 10-year, yields down a close to 4 basis points. Euro-dollar at 104. The single currency is down 0.3%. Brent's taking a bit of a knock as well. That's linked to the tariff threats, seemingly, against Colombia. Even if a deal has been reached, down 0.8%. And Bitcoin back below 100,000. There you go. Profit taking on the cryptocurrency, down 4.5% in today's session at 99,818. Let's get to the DeepSeek story then, because Chinese AI startup DeepSeek has rocked global technology stocks, as I mentioned, raising questions, of course, over America's tech dominance. Buzz grew over the weekend about the company's latest AI model being cost-effective while running on reduced capability chips. And that's what's essential in this story. Let's get more in terms of the analysis and details with Robert Lee from Bloomberg Intelligence. Rob, you've been doing your research into this company well before all this buzz kicked off. You know this business inside out. Talk to us about who DeepSeek are and how the firm has managed to kind of rock the tech world, at least for the moment.
OK, well, they're an innovative Chinese startup whose history only goes back 18 months or so. They have, as you mentioned, been on our radar for at least the last 7 months or so. And in fact, I think from an investor perspective in Asia, they are a well-known company. Although, you know, the flurry of news stories we've seen over the last 3-4 days has brought them to more prominence in European and US investors. But the fundamental reason why they're doing relatively well at the moment is the earlier chip exports, because like any barrier or any potential challenge in life, particularly from an engineering perspective, you need to find ways around it, don't you? So that has spurred Chinese companies on to focus more on innovation, and that's exactly what DeepSeek has done. They have really been at the forehead of developing a very novel architecture, something referred to as mixture of experts, which is more computationally efficient and therefore significantly cheaper to both develop and train these models. So I think it's a bit of a wake-up call, particularly to our colleagues in the US, or I should say investors in the US, that really this is a bit of a two-horse race, or increasingly a two-horse race between the US and China, and that actually China has some inherent strengths in software development. As you've heard me say before on previous interviews we've done, the technical barriers to entry in software are significantly lower, compare and contrast with semiconductors. So again, it's not to trivialize the challenge ahead of the Chinese companies, but they have traded on their inherent strengths and are increasingly breathing down the necks of these big US tech titans.
So, Rob, what does it mean? I mean, in terms of that competitive threat then, I mean, does it derail the kind of AI thesis that had held up until this weekend? And where is the pain point? Is it NVIDIA with the GPU chips, given that DeepSeek managed to create this model and build this model with some of the lower end and not the most cutting-edge GPUs? Or is it competitors like OpenAI and their partners at Microsoft? Where is the pain point, and to what extent does the US see its competitive lead be eroded?
OK, I guess from a market point of view, again, as we've said many times, you know, when stocks are priced to perfection on very punchy multiples, then they're very sensitive to negative headlines like this. So I think that explains the market reaction we've initially seen. Whether that is a more sustained, issue, both in terms of markets or in terms of the real businesses of these US tech platforms, remains to be seen. But, you know, tech never stands still. Companies are always innovating. And the Chinese, I think this, hammers home the point that Chinese companies, particularly in software, are highly innovative and are rapidly narrowing the gap on the software side. So as to whether that leads to a change in strategy from the big tech platforms in the US, we'll have to wait and see. But I think in terms of hardware and semiconductor supply, there's no one else out there to challenge NVIDIA at the moment. So I would imagine the longer-term impact on sentiment towards NVIDIA is unlikely to change because if you don't take supply from NVIDIA, who else are you going to get these chips from? But I think this is a bit of a wake-up call. I think we can say that at least. There's no room for complacency in this market, particularly with the valuations that stocks have been trading on.
Yeah, a wake-up call for these markets. A wake-up call for anyone who's not reading Rob Lee's analysis on Bloomberg Intelligence. He's been writing about this company for 7 months. Rob Lee from Bloomberg Intelligence, thank you for the analysis and context. Let's get you to a setup in terms of the earnings story in Europe then. We've been talking about the Mag 7 stateside, but it's a massive week for the earnings of Europe, of course, in terms of banks, tech, pharma, luxury in focus as well. Just some of the names there on the board. LVMH, ASML and SAP among the companies reporting. Let's bring in Bloomberg's EMEA earnings specialist, Maggie Schilter, for a preview then. Maggie, thanks for joining us bright and early this morning. Let's set things up with the luxury story, which seems to be turning around. Is LVMH going to build out that picture of a slightly more positive backdrop for luxury?
Yeah, it's starting to look that way. So it's definitely going to be in the spotlight this week. It recently regained its crown as Europe's most valuable company again. We've already seen investor sentiment in the sector start to improve off the back of some of those better than expected earnings, notably from Richemont, Burberry, and that's really up the ante for tomorrow's report from LVMH. Now, we're expecting in the fourth quarter its organic revenue decline to start to slow in its key fashion and leather goods segment, with a lot of that demand starting to come through from the US. This year, most of the growth is expected to come from the US, while we're expecting China to remain weak this year, going further into the year. And given that LVMH is one of the most exposed to North America of the whole sector, it's really well positioned to benefit from some of that rebound we see in that region. OK, so talking of the US bank earnings performed top line very well. How much of there is a mirror effect in terms of European bank earnings? We have the likes of Deutsche Bank reporting this week, Nordea, SEB. Can we expect a positive picture when it comes to European banks? Exactly. So I think 2025 is gearing up to be quite a pivotal year for European banks. Obviously, we've seen their share rally of over 75% in the past 2.5 years. And so far, that's obviously defied monetary easing. But going forward, we are starting to see a few more estimate cuts to the year ahead, which is threatening to derail a bit of that progress. However, having said that, obviously some top results from US banks so far suggest positive momentum, particularly for Deutsche Bank this week. We've seen both Morgan Stanley and Goldman Sachs see positive gains in their fixed income revenue trading. And in the fourth quarter, we're expecting Deutsche Bank to see a 17% increase, which compared to a lot of its peers is really at the top end of that. Now, when it comes to the Nordic banks this week, the Swedish contingent there is expected to come under the most pressure, obviously, given rate cuts and how those are going to impact net interest income. However, having said that, we saw already results from Swedbank last week, which came in better than expected, which does suggest that the fall there is potentially going to be less than anticipated, and we can expect to see potentially a bit more resilience there than previously thought. What about chip makers in Europe? ASML, ST Micro? Yeah, I mean, that's a bit more up in the air. The outlook is looking slightly up in the air. However, numbers-wise, ASML is not looking too bad at the moment. We obviously saw its shares take a bit of a knock last week on reports of potential of more US curbs. Export curbs. There's still a lot of uncertainty over the spending plans of some of its key partners, particularly Intel and Samsung. However, on the plus side, we did see pretty bullish capital expenditure guidance from its main client, TSMC, which in the near term is expected to be a real upside and may actually make up for some of that weakness elsewhere. Numbers-wise, as I mentioned, for the fourth quarter at least, consensus is pointing to a 25% surge in sales and order bookings as well in the fourth quarter are expected to rise sequentially, which obviously compared to a very weak third quarter it saw is very positive. Now, moving on to ST Micro, which also reports on Thursday, not quite as rosy there. The recovery there, as expected, could be delayed even further, as we're still expecting to see some weakness in the industrial and automotive segments. We've had a bit of an unfavourable outlook from a few of its peers already, Microchip and Texas Instruments, which is making that recovery look a little bit more questionable. OK, it's a bit of a mixed picture when it comes to the chip space. But yeah, the CapEx spend from TSMC could provide that support for ASML then, and its lithography machines and the demand for that kit. Thank you very much indeed, Maggie, for a fantastic setup in terms of the earnings story for Europe that will unfold, of course, through this week. Now, 4 weeks before Germany's snap election,
And the political temperature is rising. Tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Let's get the details with Bloomberg's Oliver Crook, who is in Berlin for us. Ollie, what did Musk say at the rally? His support has been there for the AfD. Now he appears at a rally virtually. What exactly did he say, and is it moving? Is it changing the momentum for this far-right grouping?
Yeah, listen, Tom, I think it's an interesting question about whether it's changing the sort of momentum. I think it's very interesting that he's wading in at all. I mean, I think this took everybody from surprise from the very beginning in sort of December when he began to wade into German politics. But really, this has now been his sort of consistent rallying cry, really very, very supportive of the AfD. He did that interview with Alice Weidel, and then again, sort of appearing before the crowds. And what's interesting is that when he sort of has these conversations, it begins sort of on a sort of basic sort of economic policy levels. And let's listen to kind of where he sort of began the conversation. Have a listen.
I think you want more self-determination for Germany and for the countries in Europe and less from Brussels. That's my opinion. I think there's too much bureaucracy from Brussels, too much control from sort of global elite. There should be more determination by individual countries. So I very much hope that the AfD does well and that Alice Weidel is does become chancellor. I think that would be very good for Germany.
And it sort of begins there because, you know, the AfD policy tends to be much more libertarian, much more sort of cutting back regulations. And that is something obviously Elon Musk is very much in favor of. But then the conversation sort of progresses and it becomes clear it's not just that, right? It's against this idea that multiculturalism is diluting societies. I'm saying that basically the AfD is going to sort of turn that back. And again, this is a very, very fraught issue in Germany in particular. This is not the United States. And he went on to say that basically he thinks that there's too much focus on past guilt and that we need to move beyond that, that children should not be guilty for the sins of their parents, let alone their parents' parents, i.e. their great-grandparents. And that is in the context of course, what we saw in Germany in the Second World War. And when you talk about the AfD, this is a party that has within its ranks people that are designated by the German government as extremists, people who are strongly suspected to have sort of Nazi sympathies. So when you have somebody coming out, and you had that weird digression in the conversation with Alice Weidel and Elon Musk, when they were talking about how Hitler was actually from the far left and not a far right, all of these sorts of things come in the sum as to really shock the German establishment. And again, just behind me in front of the Brandenburg Gate, you saw it sort of in full prominence this weekend, tens of thousands of people protesting. And today, Olaf Scholz in Poland with Donald Tusk to sort of to note the sort of liberation of Auschwitz. And again, these leaders coming out and talking about how concerning this is. As far as how much this is moving the dial, the polls are really more or less unchanged. The CDU is still leading with about 30%, but it's certainly an interesting development for the German political establishment, and one that, frankly, the German political establishment does not really know what to do with.
Yeah, and his comments about too much control from the global elite, coming from Elon Musk, too much control from the global elite. Talk to us all about the there's a political firewall traditionally, of course, blocking the AfD, even if they're polling around 20%, from actually gaining real power, significant power. Is that firewall holding up?
So listen, I think so far it's holding up. What has been interesting is that even in the lead up to this election, there were sort of moments where Merz, you know, not even just sort of in the last few months, but over the last couple of years, sort of seeming to sort of test the waters and saying, oh, maybe the CDU could team up with the AfD on some local policy issues. And again, he got a huge backlash from the political establishment in Germany. And there seemed to have been a little bit of a door opening for that on this issue of immigration and some legislation that the CDU wants to put forward that would basically sort of impose border controls more permanently in Germany, that would expedite sort of deportations. And he was saying basically we're agnostic as to who is going to vote with us. We just want to get this sort of done. Again, massive backlash there. He's now changed the legislation in order to put sort of language in there that would make it very hard for the AfD to support. But again, Tom, this doesn't resolve the issue. And this is something that you're starting to see everywhere in Germany, whether it's in Europe, whether it's in France, whether it's in the United Kingdom. Basically, the political establishment not realizing, not understanding how to deal with this approach. And this is something that Alice Weidel said to me a couple of weeks ago when I spoke to her, basically that the Germans feel that they don't have a choice on the sort of conservative right, because in any sort of government, there's going to be a coalition between the right and the left.
Okay. Ollie, thank you very much indeed. Oliver Crook On the ground for us in Berlin with the latest in terms, of course, of Musk's support for the AfD and the SPD Chancellor Olaf Scholz concerns being voiced there around the CDU and how it's thinking about potentially on some issues working with the AfD. That remains, of course, to be questioned. Coming up, we are joined by the CEO of global carbon ratings agency BeZero Carbon as it seeks to expand its coverage after a big successful funding round. That's coming up next. This is Bloomberg. Welcome back. Global carbon ratings agency BeZero Carbon has raised $32 million in a Series C funding round. The London-based company will use the new funds to expand its ratings coverage and boost its international presence. With me now, very pleased to say, is BeZero's CEO and co-founder, Tommy Ricketts. So, Tommy, we touched there on the raise and how you're going to deploy that capital. I just wonder what it signals. So $32 million, maybe I'll get a question to you on valuation later. But what does that... It's not insignificant. It's a decent size amount of money, $32 million US dollars. What does it signal, do you think, at a time when we're seeing a Trump administration and some others kind of walking back on attempts to get to net zero?
Yeah, I think to put into context, it was been obviously a difficult funding environment for the climate movement.
Yeah.
Obviously, rates going up and the climate incentives going down has made it harder. So I think the quantum might not be huge, and certainly in software, it's smaller than hardware. But it's a very good incentive that people are saying, look, we care about the carbon market, we care about climate change. And from Singapore particularly, they're saying that's a really national objective for them, to make Singapore the home of carbon markets in Asia.
And they're one of your key investors, is a venture fund backed by Temasek, the sovereign wealth fund of Singapore. Is Singapore an outlier, though? I mean, do you worry about the kind of cold chill, the cold winds that are coming through as governments, not just in the US, kind of reassess the commitment around ESG, the commitment around the transition, the commitment around net zero? How much of a headwind could that be for your business?
I actually think maybe the other way around. We're actually seeing a lot of governments taking carbon markets much more seriously, looking at market-based solutions for how to pay for their climate transitions. And so if you remove the US potentially from the equation, although corporate America is active, you're looking at a number of different countries looking to use Article 6 markets, which is the UN mechanism, to actually kind of embrace this trend.
How are you putting the funding to play?
So you mentioned it, looking to expand globally. We already have an office in Singapore and in the US, but I think we're looking to be more active in Asia particularly. And another one, as would be common, is to embrace AI and see how it can change our business. And
your presence in the US, does it change at all? Is that still an important market for you?
Yeah, about 40% of our revenues in the US.
Yeah.
I think the key thing there is corporates. Large corporates are buying, and they're buying for the long term, and so they're looking through any sort of short-term politics.
What is revenue growth looking like for the business right now? And what is a kind of evaluation that you might be looking at?
Revenue growth, we're trying to double. Early stage company.
Double from last year?
Yeah, trying to, you double. That's the stage for the first few years. And then valuation, I mean, obviously it depends on what the buyer's willing to hold, but ultimately we've got an up round, which I think is also very good for a Series C at this stage.
Yeah, an up round at a time when plenty out there are doing down rounds, being forced to do down rounds. Not the case for you guys. Is the UK government doing enough? I mean, you're in the business of giving ratings. How would you rate this UK government in terms of its support for the tech sector and the kind of work that you guys are doing?
So I think in the narrow definition, what we want from the UK government is to be very active on defining the use of carbon credits in net zero strategies. So saying to corporates, saying to the economy, you should be buying them. You can buy high quality ones, and that would be a huge demand signal to still a major polluter, 1% of global emissions. On the broader scale, look, what do you want from a tech founder? You want good tax regime, you want good employment and rights, you want good immigration rules.
Are you getting that?
And you want good skilled labour. I mean, definitely getting very good skilled labour. The UK is a home to science and finance hubs. I think the rest of it, we'd like to see more progress.
And you want to see regulation as well?
Yeah, we want to see regulation. Regulation is very important for us because we're kind of like a financial service, but that's unregulated. So a lot of our customers are banks, they're financial services, they're big commodity players. They want to use ratings as a risk instrument. And if we're unregulated, it's difficult to take it to an investment committee and say, I trust the opinion of this third party. They say, are they regulated? They say, no, well, I can't trust them then. So that's very important for us in terms of the credibility.
Are the Treasury I want to fold two questions into one because we're running out of time. Are the Treasury listening to that? And what is the potential market value of this sector?
The Treasury are listening to it. I think our call there would be there's something called the ESG regulations. And I think our call would be carbon and ESG are cousins. They're not necessarily the same thing. But hopefully they're listening. It's just about, grasping the nettle on the broad impact. So we did an analysis which said science-based target aligned companies, Scope 3 emissions, that's the ones that they don't create, about 6 billion tonnes, 15% of global emissions. If everyone paid around $15, $16, $100 billion market overnight, employing about 1.5 times the size of the oil and gas industry. So potentially, with the UK as a hub for that, you could have a huge impact on jobs and growth.
OK, the potential's there. The UK has to get it right, and you're playing your part. Tommy, thank you very much indeed for coming in. Tommy Ricketts, the CEO and co-founder of BeZero, on the back of that $32 million raise for that London-based global business. There's lots more coming up. Stay with us. This is Bloomberg. Welcome back. Happy Monday. A big week, of course, in terms of the earnings. We have some big earnings coming through from Europe. We had RyanAir earlier today. And then, of course, you have the banks and the luxury space in Europe. But the focus as well, stateside, will be on the 4 out of 7 Mag 7 companies reporting, including Apple, Meta, and Microsoft. And the question, of course, continuing around the valuations of whether earnings and the data that comes through from these companies can really justify the stretched valuations, particularly at a time, of course, when you have that competitive threat now coming out of China with DeepSeek. So this is the view, 12-month forward profit margin estimates for the Mag 7 companies. And you can see that gap, the kind of crocodile mouth shape versus the equal weighted forward 12-month margin estimates coming through from the S&P 500. So that gap is there, and that leads to question marks, at least for some. Let's flip the board and have a look at the DeepSeek story then. This is founded by a hedge fund guy, an owner in China. It's a kind of scrappy startup, but what they've managed to do is create a model, open source, interestingly, that is creating the efficiencies with older, more legacy GPUs. And that is raising, of course, question marks as to whether or not that competitive challenge is going to be facing the US companies and whether or not, in fact, that thesis is going to hold up. Here's how people have been looking into this company. The searches have just been shooting up. Volatility is easing across the bond space and the equity space, but for how long? The Fed, of course, that decision coming on Wednesday. Does Jay Powell keep in play 43 basis points that traders are expecting in terms of rate cuts for this year? There's plenty more coming up. Stay with us. The opening trade is next. This is Bloomberg.